This sounds like this goes way back to the very first board that allowed all of this to happen, that the seeds were planted well before this latest round of bad news.
I think that's right. I think what we're seeing is a symbol that things were going wrong from a long time ago, and unclear who dropped the ball or who took their eyes off the road, but something happened. And it's the kind of story where everything that you would not want to have happen to a company, to the board, to management, to the CEO is coming to fruition with WeWork. But it definitely points to something went amiss in corporate governance, whether it be in oversight or in decision making.
Henry, why did early investors allow this to happen? Because to a certain extent, they allowed it to happen. Was it because this was supposed to be a unicorn? Was it because there's so much money to be deployed around the world because interest rates are so low that they had to put it somewhere? And there you go, WeWork, here's my check.
I think that's absolutely right. More than just allowed it to happen. I mean, this was their responsibility as a board, and there's no other way to describe it other than just gross mismanagement. Company, in hindsight, just took an extraordinary risk betting that they could do an IPO at a very high market capitalization, even if investors hadn't just rejected the financials, which they did immediately. It was remarkable. But say the market had weakened, we'd still be in this scenario. So just gross mismanagement all around. And I think ultimately it comes back to the board. The CEO is very charismatic. He's very aggressive. It's the board's job to rein him in.
So, Tamara, the employees who are going to walk away from this company, in many cases with options that they thought were going to be valuable, but now are underwater and maybe will never have value. Hey, listen, we know a little bit about that at GE, by the way, having been owned by them. But what is the possibility of a major legal action against the board, against the CEO, against maybe even SoftBank?
Mm-hmm. So I've been thinking a lot about this. It's hard to see how the current shareholders would take legal action, because to take legal action would honestly to have egg on their face. They were there for this. The potential shareholders, who are the shareholders in the IPO, they're the ones who I think actually did their job in all of this. They're the ones who shone a light and exercised their monitoring and accountability role. But unfortunately, they're not currently shareholders, so they have
no standing, I guess you would say.
No legal leg to stand on. So hard to see. Potentially, if you are a current shareholder of maybe a lawsuit for waste, but very hard standard to meet. I mean, you're talking about something that's so outside of the norm. Even for a unicorn, it would be extreme and very hard. So right now, I think for a lot of them, they do own stock, so maybe tender into SoftBank's tender offer and try to save and salvage what you can. And let's not forget that earlier this year, WeWork did lay off a number of employees. So the employees that are left actually survived that initial round of layoffs, and they too probably saw some of the writings on the wall.
Henry, do you think that investors, early investors, whether it be PE or VC firms, will have learned from this example?
I think so. This is extreme. This is SoftBank, which has always been incredibly aggressive, and I'm sure they have learned lessons internally that they need to be much more disciplined about what they're doing. But in every cycle, you get companies like this where for many, many years, it is the most aggressive and the most hyperbolic and the most charismatic companies seem to win over and over again. So everyone begins to jump in on that. But then you have a case like this where
the source of the problem, though, Henry, seems the source of the problem seems that there was this, dual class structure or super voting class where Adam Newman owned the whole company, basically controlled the company, and was in there, and they later had to be bought out. I mean, that's why he has this big payout. And so do you really think that investors will learn to the point where they'll say no more with this dual class nonsense? I don't know.
I don't know about that. I mean, I think that, this wave of companies over the past 10 years, there has been a swing toward the belief in Silicon Valley in particular that the founders tend to be very important. You want them, keep them involved. Lots of companies feel like there's so much adverse pressure in the public market that it makes sense to keep control with a small group and the founders. Now we're seeing the other side of that. But that said, The reason the company had a $47 billion valuation and was allowed to go as fast as it was because, in part, SoftBank kept continuing to provide capital. The founder can't force that, no matter how much control he had. So it was a combination of factors here that led to this disaster for employees and everybody else.